Hello and welcome to today's episode of Young and Visionary. You're with me, Esnat Suleiman, and today I want to talk about investing in government securities. Now, as you get into the habit of saving and investing and your portfolio starts to grow, the next thing you need to start thinking about is diversifying your portfolio. So remember the common saying, don't put all your eggs in one basket. That is exactly what I'm talking about. Now, most of you, when you start off, you're probably investing in fixed income. So the fixed deposits that I talked about, the savings and the various products that are available to you. And from my experience, I have not seen a lot of people investing by themselves in government securities. And I would like to think that this is because of a couple of reasons. First reason is probably that people do not understand what government securities are. They're probably not even aware about government securities and their existence. The second reason could be that you think that investing in government securities is not for individuals like you and me. Maybe it is just for corporates and pension funds and those type of investors. And maybe you sort of feel like you don't really understand how they work, so you're not sure whether you can put your money in there. So today I just want to unpack that, because government securities are a good investment asset to add to your portfolio. And the reason they're a good asset to add is because of the level of risk. They carry a very low level of risk. In fact, they are considered to be risk-free assets. Now, for some of you who have not heard of government securities, they are simply an asset that is issued by the government of Malawi through the central bank, which is the Reserve Bank of Malawi. And when you invest, you're simply lending money to government. So you're placing your money with government. That is why they're considered to be risk-free. And they are great for people who are just starting off, because now you want to see how the investment market works. You're not ready to start taking a lot of risk, or maybe you've gone very far in age, so you do not want to risk losing money at a very late stage in your life, and you'd want to make sure that you're investing in secure investments. And they're also great because of the cash flow that comes through when you invest in the government securities. I will go into detail on that one. But let me start by mentioning to say that there are two types of government securities, rather 2 to 3 types. The first one is a treasury bill. A treasury bill are short term. So there are 3 types of treasury bills that you can invest in. There's one for 91 days, there's another for 182 days, and another for 364 days. Now, treasury bills, their characteristic is simply that they're short term, and the second thing is that they are discount instruments. What do I mean by discount instruments? It means that in the same way that if you go to a shop and the price of something is worth 100 kwacha and you get a 10% discount, you pay 90 kwacha. So the way the treasury bill works is, if you are buying a treasury bill for, let's say, 100,000, you will pay 90,000 today. Well, the price that you pay will actually depend on the return that you have indicated you would like to earn. But for argument's sake, let's assume that the return then gives you a cost or a price that you're going to pay today of 90 kwacha. So you pay 90 kwacha today. At the end of 91 days, you get 100 kwacha. So what you earn is the difference between what you're paying today and what you will get at maturity. So that is called a discount, and that is what you earn on a treasury bill. Now, I'll move on to the second category, which is treasury notes. Now, the treasury notes in Malawi, they range from 2 years all the way to 7 years. So far, that's what we have seen in the market. So you have the 2-year, you have the 3-year paper, then you have the 5-year paper, and then you have the 7-year paper. Now, the treasury note is different from the treasury bill in the sense that the treasury note now has 2 components of returns. It has a discount, this very same way that the treasury bill will have a discount, but the level of discount will depend on the actual yield that you have indicated you would like to earn, the return that you expect to earn. So if your return is higher, your discount will also be higher. And then you have a second component of return, which is called a coupon. But the coupon is simply an interest income. So the coupons or the interest is paid 2 times in a year, most often. There can be instances in other countries where the coupons can be paid more frequently, but what we've seen in Malawi is that these coupons are paid semi-annually. So the coupon is paid as a percentage of your face value or the amount that you will get at maturity, not the price that you're paying now, which is the discounted price. Now, the coupons also differ depending on the maturity or the tenor of the type of treasury note that you're buying. So the longer the treasury note, they will probably give it a higher coupon rate, and if it's shorter, it will probably have a lower coupon rate. So for argument's sake, if the coupon that you're getting on an instrument is, for argument's sake, 10%, the return that you are expected to earn is also 10%, it means that you will not get any discount. So what you pay today will be equivalent to what you will get at maturity. What you will be getting in between are the coupons that are worth the 10%. But if you indicate that you want to get 15%, you will get your 10% through the coupons annually, but you will get your additional 5% through the discount, or the difference between what you're paying now and what you will earn at maturity. So that is a treasury note. The last one is a bond, treasury bond. In Malawi, the common ones that have been issued are the development bonds. And the idea of the development bonds are that these are money that is being obtained for long-term projects, and hence why the securities are also long-term. So for the longest time, we would only have 10-year bonds, but there has been an outcry from the market to say that can we have bonds that are shorter than 10 years? So we've seen bonds for periods shorter than 10 years, but the idea of the bond, because they're development bonds aimed at funding long-term projects, they have mostly been issued for a very long period of time, but they work pretty much the same as the treasury note. The only difference has been the period for which they were issued. The next thing I want to talk about is the minimum amount that you can invest in government securities, because I know that this is quite an area that a lot of people may not be aware, and probably one of the things that deters people from investing in government securities. I will start with the treasury bills, which are on the shorter end, ranging from 91 days to 364 days. The minimum amount required is only 10,000 kwacha and multiples of 1,000 thereafter, meaning that you can invest 10,000, 11,000, 12,000, or as much money as you actually have. So as you can see, these are investments that can be made by ordinary people like you and me. The only thing that we need to be careful is when we are trying to invest, we need to check with our service providers on how much they charge for the service, because you need to make sure that the return that you're going to get is actually going to be higher than the charge. So you will get to a point that then makes sense for you to invest in that particular treasury bill. I'll then move to the longer term dated, which are the treasury notes. The treasury notes, which range from 2 years all the way to 10 years, the minimum amount required for investment is 1 million and multiples of 100,000 thereafter. So as you can see, once your investment have grown, or whether you're able to earn a reasonable amount of income, these are investment opportunities that you can explore, and they do offer better return compared to the ordinary fixed deposit, especially when you look at the treasury notes or the longer term treasury bills like the 364 as well as the 182. Occasionally the 91-day treasury bill may be lower than the fixed deposit, but this happens once in a while. I will post here the current yield curve, which shows the current interest rates that you can get on each of the different treasury bills as well as the treasury notes. I must say that these are published by the Reserve Bank of Malawi, and they do change. So the current interest rates that you're seeing right now are interest rates that are applicable as at 15th December 2022. If you want to look at new interest rates, you can always go to the Reserve Bank website. Now, how do you invest in a treasury note or a treasury bill? In Malawi, the auctions for treasury bill and treasury notes are conducted every Tuesday. And then if you are successful, you then settle or buy that treasury bill or treasury note on a Thursday. So that is when you actually make the cash payment towards the purchase of the treasury note or the treasury bill. Now, how do you actually do it? So there is what is called a bid form, because these securities are issued using an auction system. In an auction system, obviously, what will happen is, for the authorities or the Reserve Bank of Malawi, which is the issuing agent, they will be interested in people who bid to get these securities at a lower interest rate, because the cost will be lower for government when they are repaying. So as a result of that, they will start at the lowest interest rates and keep going up until they get to a point where they have raised enough money or as much money as they wanted. So that is why we actually bid in an auction. So you will have a form where you complete your details, and also the details in terms of the pricing and the amount that you want to invest. Now, these forms, they can be obtained from your bank, they can be obtained from fund managers, they can be obtained from stockbrokers. And they actually people in these places that can help you complete this form if you are completely blank and you don't know what to do. Actually, when you go to the Reserve Bank website, you can even find a calculation on treasury bills, so that you can look at what the return would look like in terms of the cost and face value or the maturity value based on the return that you're looking for. So once the bid form is completed, you submit this to your bank, and your bank is the one that will process the bidding for you. The banks, whether it's a bank or an asset manager or a stockbroker, they'll charge you a minimal fee. It's not a lot. At FDH Bank, where I work, we charge 15,400 for the actual bidding. So once you are successful, they will also notify you that you have been successful, and make sure that you are ready to settle on come the Thursday. And if you're not successful, you will also be notified that you're not successful. So the results of the auction always come out at the end of the day. So as you can see, it's pretty straightforward. You will not receive anything physical, because now these government securities are held in the Reserve Bank system called the Central Securities Depository. Basically, it's just an electronic system that maintains a register of who's holding how much of a particular security. So anytime you want to check on your investment, you can always contact the bank or the broker or the investment manager who you contacted initially to do the bidding for you, and they'll be able to show you your asset when it's going to mature. And then also, if it was a treasury note, when it's every 6 months, you will get some coupon coming into your account. So that will be the cash flow that you'll be able to get on a regular basis. So that's why it is also treasury notes are perfect for people who desire to get a constant flow of revenue. So if you invest in several of them, you ladder them well, what will happen is you could even on a monthly basis be having a certain coupon that is coming into your portfolio. So I hope that this information has been beneficial. You really need to start thinking about diversifying your portfolio, and diversification is not only diversifying across various providers of fixed deposits, but now you need to start moving into other type of asset classes, and government securities are an excellent asset class to consider for your portfolio.